Good evening. Welcome to the ShadowTrader video weekly for Sunday, November 11th, 2012. Markets continue to sell off this week, or I should say have sold off pretty hard this week, into a 50% Fibonacci retracement area. We're very, very close actually on the S&P. My focus in this week is on these two areas, which I think are going to create a playable bounce in the market. We're actually very, very close to the 50% on the S&P, and sometimes it comes close but no cigar. It may have just already, that may be all we get, because if you look on the continuous contract of the ES overnight on Friday morning around 8 a.m., we actually breached the 50% retracement by just a hair, and then turned around and bounced pretty hard off of that level. So we'll have to see how the markets react. Overall, it doesn't feel to me as bearish, I think, as many people think that it is out there. I'm just been looking at the profile here as the market's been selling off, and there's a couple of things I wanted to point out to you. Is the fact that this was your big sell-off day here when the market broke on 11/7, and since then, notice that the value areas, which are the black brackets right here, right, they have been overlapping instead of breakaway. Right. Whereas in a stronger downtrend, I would think that the value areas would be separated and they wouldn't be near each other at all. Beyond that, you also have some responsive action here on the second day of selling that actually took the market up into value, came up close to the point, just over the point of control, and then sold off. I would just be thinking that that stronger selling with more like new selling coming in, as opposed to just a long liquidation, would have probably just been selling it harder from the open and would not have this sort of look into value. And then Friday was a bounce day off of that fib number on the ES at the lows, and we explored again back up into value. And Friday was actually interesting for day trading, because notice that the top here was dead on the POC. You actually went right to the point of control, explored up through value, and then sold off again and closed back down near the lows. So to me, overall, the profile is not showing any super big panic like everybody's selling all at once, and that's why I'm keeping my focus on these Fibonacci numbers, especially in the S&Ps, in the cash market, to see if there's going to be a playable bounce at these areas. We may actually see this early this week if the bears aren't able to take this 50% retracement area lower. If the Friday low is taken out, I will be targeting the 61.8. And that will be where I will be thinking that the market will have, like I said, a sizable bounce that would be playable in futures and equities, however you want to do it. All right. Last week, I told you about a setup in Crude that I wanted to follow up with you on. I did actually short Crude when I said that I would, which was after here 1, 2, 3. Let me just make this bigger. We have 5 days here. 1, 2, 3, 4, 5. Right. So right in here, I told you that this is what I call buyers shut off. You have like 1, 2, 3 slow up and then a big day down. And I said that you shouldn't retrace more than 50% of the up move, and you probably roll over. Well, on this day here, Monday, we did retrace 50% of the up move. I did short here, but when I shorted, I ended up covering just for about 10 cents or so, and essentially just scratching the trade because it just wasn't acting right. My thought was that after this momentum selling down, this bounce up would be very weak, but when it went to that 50, it went up on kind of a spike move, and then it just backed off so slowly. It just kind of dribbled down. And, in hindsight, it seems like it was the right thing to do to cover short, because after that, Crude just shot up like a rocket. And then since then has taken back that entire move, made a new lower low, and since then bounced. So now there's absolutely no trade in Crude to me. It's just really kind of messy. One thing that I would be looking for is the fact that I'm interested in the full-on retracement here of the move, like 100% of this move, to bring it down into here, what I call filling up the triangle. That would be like this, right? Once this part is broken, the triangle fills up down to the base. That would be a good long trade in Crude. However, if this doesn't happen and we just continue to get sideways action here, then if a rounded bottom forms here, I wouldn't be surprised if this is a sort of a bear disappointment, and you see Crude really ratchet up to the upside. So that could be interesting as well. And then this trend line here would be in play, and there could be a nice long play that could last a while there, because I think nobody would have been expecting, this sort of breakdown below this trend line. and a move up higher. And that's really of interest because there's a lot of different plays you can use. I like to do like the selling calls against USO stock or selling puts on USO. USO has weekly options, so whenever I see that crude is in some sort of at least a relatively stable uptrend, that's usually how I play it. I like to look at these energy ETFs and do a collar maybe, or just sell covered calls, or do or sell some puts in it. So that's something that I'm going to be looking out for in the future in crude. Along the same lines, GCs are acting very interesting here. Something I wanted to point out to you, that gold is actually holding up really well, making a inverted head and shoulders pattern. Here's the left shoulder here. Here's the head. And here should be the right shoulder. So that means that our support level would be right in here, just above the 1700. Right? So we should see gold do like this and then go up. That is what we'd be looking to happen in gold if the pattern plays out. So I'm going to be keeping an eye on that. Obviously, then the target would be here to the prior highs. And as I said earlier, what is interesting about this is look at what it's doing in the face of this chart. Dollar index has done nothing but just go up, up, up. There's been quite a steady rise in the dollar, and even a dollar breakout out of a bearish consolidation. I say bearish consolidation because you had this range develop here after this down move, right? And we talk about this pattern a lot. This is actually one of our favorite patterns, saying that once you have consolidation chopping in a range after a down move, the up move out of there is usually playable. We actually talked about this exact setup in the dollar about, I don't know, 2 or 3 weeks ago when we started our Tasty Trade show. On one of the earliest shows, we talked about this pattern, saying the dollar has propensity here to go to much stronger. When I was saying those comments, I really didn't think at the time that gold would hold up so well, but at the same time, again, that gold chart has really held up pretty well. You're not seeing this weakness in gold over the last few sessions as the dollar has broken out. So I think that's of note there. All right, last but not least is the mighty Apple. Getting tons of emails on Apple all the time as far as where is the buy point, when is it going to stop going down, etc., etc. If you read the Ask the Shadow column in the weekend update that you're looking at right now, just hit the table of contents on the left pane. You're probably on it right now because you're accessing this video through the weekend update. Ask the Shadow has a nice chart in it on a monthly Apple showing where I think the support is. The focus for now is that Apple will probably travel down to this low here, which is just under where prices are now. That low is actually 522.18, so we didn't quite get there. If I switch to a monthly, this is what's interesting. The gentleman that wrote in the question about Apple, there was a number of them, but I picked this one gentleman. I told him that I'm keeping my focus on the monthly trend line, which is right in here. So it's actually just over 450. But what's interesting is that he was talking about in his email saying, I'm looking at a low, I'll use a weekly for this, from a 2011 low, from a pullback low. Actually, I'll just stay on the monthly. It's easier. So he said, look at this 2011 pullback low. And notice how when you put that Fibonacci in from this 2011 pullback low right here, right, you get this move here. Actually, see if I can't just delete it. There we go. You get this area that ties right in with the trend line just over the 450. You notice that on the fib number is 460.55. And that's where I think the stock is going over time. For those of you that are long from the 600s, you may not want to be hearing this information, but I think it should occur to you when you're looking at this that we've been in rally mode here since late in 2007, actually beginning of 08, I should say. Beginning of 08 is when it took off. So, I mean, you're looking at 1 year, 2 years, 3 years, almost 4 years now. Probably a good 3.5 years to here without any sort of meaningful pullback at all to a dominant trend line. So that's my target really to the downside where I think we're going. I think it's going to be a screaming buy there for a bounce. I'm not one of the people that are in the camp thinking that buying there takes the stock to 1,000 or even back to 700. But so what? You don't need it to go that high, for a good trade. What if it bounces $100 from there? I mean, the move from here is you're talking, 700 down to roughly 450, right? So you've got $250 here. If there's just some percentage bounce of that, if you can catch a $50 to $75 up move from there, over the course of, say, a few weeks to a month, then I think it's going to be a great trade. So I'm watching that 460 area closely. In Apple, it could probably take another month to get there, but I think little by little the stock is going to be getting weaker and going there. The first reference point that's going to be of major import in the weeks to come is obviously this 520 level. So you'll be looking for a close underneath that 520, right? Whatever that low is there, the 523 change, whatever, and that should take it down to the line. All right, that's all I have for this week. On behalf of myself and the entire ShadowTrader team here in beautiful Philadelphia, Pennsylvania, as always, I wish you good trading and good night.